Good afternoon, traders. This is Christian Fromhertz, Tribeca Trade Group, and today is Wednesday, March 15th. Another volatile day for the markets. We will get to all of the themes of the day and the price action, but first things first, risk disclaimer in front of you. Everything that we're going through is for information purposes only, not giving out any advice or recommendations. Please read the full risk disclaimer right there. So, well, where do we kind of start with today's price action? Of course, Credit Suisse dominated like the headlines. I'll give you my quick 30 seconds on Credit Suisse. I don't know, a lot about who's holding exposure, who's not holding exposure, and of course the risk of contagion, which I think people are worried about that. But Credit Suisse, in my opinion, right? I would be surprised if there's a lot of people holding a lot of exposure in this. Of course, it is a big banking company globally, but I mean, you've kind of seen the writing on the wall, haven't you? This stock has been under, $10 for for a good long time now. So I would think that most people have like minimized their exposure already to Credit Suisse. Now, of course, if this name goes under, it won't be simple. Banking companies are intertwined with other banking companies and so forth, but it's kind of like the same thing. We haven't heard about Deutsche. I think we heard a little bit about Deutsche Bank today, but we haven't really heard too much about that. But remember, this name like feels like it's almost gone out of business a couple times, right? And the world's kind of managed through it and went on. There are going to be companies that go out of business, and when it's a big banking company, I get it while there's angst and so forth, because you don't know who has exposure, and there could be some type of derivative exposure. So again, I said I would talk about it for about 30 seconds, but at this point, like it's not like Credit Suisse. Some of these other companies that were trading at $100 that all of a sudden are getting knocked down to $20 or $30. I think that's a bigger deal than a company that was trading at $5 and is now trading at $2. Right? Don't let some of I heard earlier, oh my God, this is the biggest decline in Credit Suisse. And it's like, really? From 250 down to 150? So make sure you look at where these things are traded. Again, I'm not trying to downplay any of this because I don't know who has exposure and who doesn't. But I think if you're a big institution and you have big exposure to Credit Suisse at this point, it's kind of your fault. But nevertheless, I might as well talk a little bit about the banks today. Not down that much. Now, of course, they've been hit already pretty hard, but notice they came off the lows today. So this really wasn't, as much as Credit Suisse dominated the headlines today, but I just felt like there was more damage done in other places, right? So the banks were only down, this is the regional banking ETF, of course, which you hear about a lot. It was down 1.6% today. Okay, so still a decline, but not nearly as big as some of the other declines. It's still holding the lows for the week. KBE, which is all banks, not just regional banks, was down 2%. It kind of just felt like some of these other banks were getting hit, maybe because people fear that they've got exposure to some type of exposure to Credit Suisse. For example, Morgan Stanley was down like 5% today. Right. So again, some of these names are still making new lows. Right. And then there's and then there are some other banks too. There's these one-off situations like FRC was down 21% today. So again, by no means are we out of the woods with, hearing about different banking companies struggling and so forth. So this is a cause for concern. Again, I'm not downplaying it. I just thought it was interesting to see so many of the other areas of the market that were down even more. Big move down again in crude, right? We went over this yesterday. I didn't put on a short position. I kind of wish I did going into this, but you're really seeing a big breakdown in some of the areas. Like oil services was down. I mean, this was down 7% today, right? I mean, so again, like to me, it was a head scratcher to me why this wasn't getting more attention. STLD had a huge move, right? This thing was down 12% today, right? So these names are still kind of correcting and they're going through it. A lot of the metals, materials names are falling along with the energy space. They're really correcting a lot. So what's the takeaway from this? there's a few takeaways. Number one is, volatility is still very high. If you look at the VIX, there's 26. I mean, very small silver lining is we didn't we didn't go above this week's highs in the VIX. So we're still kind of sitting here at 26, which is a high level. It's nothing to sneeze at, but we didn't ramp higher. So still, this is in a very difficult position. I think, like, to kind of get to the conclusion here is, like, I think that, overall, something that we've been talking about is just being very defensive, right? If you're trading in this market, I think adjusting your position size. This market is also giving us, I'm kind of getting to the conclusion of this video. I didn't want to get there that quickly, but I think this market is giving you plenty of day trading opportunities. Holding risk overnight. I mean, I actually I started a couple of positions yesterday, and I got stopped out of them in the morning. Just too much volatility. And, that's the old saying, not the old saying, but like, you dip your toe in and your toe gets chopped off, right? So again, this market is there's a lot of risk in it. There's a lot of areas that are still going down very, very quickly. And even more so than what the banks did today. Looking at the economics, so again, like, I'm thinking more kind of, than just today's price action, right? I think if you've been defensive and you're keeping, your trade small and so forth, you're doing a very good job in this market, in my opinion. And then you kind of look for better days. When does that happen? I don't know. The breadth, did recover from the lows, but overall, this breadth is not good. And it hasn't been the case for a while. So, if we look at the raw numbers for today, just to kind of give you a glimpse of this, but, the Dow had, it actually had 16 advancers, 13 decliners. Look at the new 40-week lows. I don't know how that's right, because there's only 30 names in the Dow, but it says 40 new lows. Maybe the S&P had 48 new lows, 4-week new lows, and 4 advancers. And also, if you look at 52-week lows, so nothing's really changing here. What I mean is, sometimes when the market goes down, sometimes you want to see some type of a divergence where you're actually not seeing new lows pick up. We're too early in that, right? So the word that comes to mind, two words, right? Defense and being patient. And keeping your exposure. I think, again, I'm not telling you what to do, but when you see this type of market reaction, I think the best thing to do is kind of keep light and be defensive and wait for things to kind of get better, because like silver lining, and again, you may disagree with me with this, and that's fine, right? That's what makes a market. But look, I mean, the numbers for the PPI were lower than expected. The retail sales came in down for the month. And if you look at some of the areas that outperformed today, I had a lot of questions today about, geez, I don't understand why the Qs are up today. I mean, could it be that, and I know this is moving the needle from one area of the spectrum to the other very quickly, but it seems like we might get, they're like deflationary areas that are outperforming, right? When you see the Qs up like that. So that's my opinion. And I think, the CPI report was yesterday, of course, but it is old information, right? I think what's happening now, and I was listening to this morning, and I forget who said it, but I agreed with it. But the stuff that's going on with the banks coming down like that just kills inflation. So I just don't think that that's going to be such a cause for concern. Again, maybe I'm jumping ahead a little bit too much, but I think that the silver lining is, perhaps all of this stuff is doing what the Fed wanted to happen, but on a much quicker basis. Now, again, the worry is that this spreads and that there's systematic issues that linger for a while. That is not good. But on the plus side is, before we were looking at going to July, and there were still going to be rate hikes, right? That's that's what, 4 or 5 months away, from where these meetings were taking. Now it looks like, we may not get a rate hike come next week. And that may be it. Like, if they do raise interest rates, it's going to be based on what the market is telling you. Again, I'm not making a prediction. I love, again, all these folks on financial media, like they think that they have the answer to these questions. They don't. Nobody does, right? And that's why also, not only with what the Fed is doing, but what the overall market is doing, and whether or not there's going to be another bank that runs into issue. Nobody has the answers to those questions, right? So people making predictions about this, or who think the financial system is sound, right? Every time you hear one of these things, you have to cringe a little bit, because at the end of the day, nobody really knows. One of the themes that I had yesterday was that this is a confidence game, right? The stock market is a confidence game. The banking sector, it's a confidence game, right? So if there's a big blow to confidence, you don't snap your fingers and that comes back right away. It takes time, right? So be careful with these predictions about, oh, the banking sector is, it's strong, it's fine. It may be, but things could change very, very rapidly. And I think the best thing that you could do is just be patient, right? And not rush anything, right? Again, I shake my head every time I hear somebody say that, oh, these banks are okay, and so on and so forth. You just don't know that, right? The volatility is too large, right? I know a lot of people are quoting this one. So I've got up here bond volatility, so I might as well talk about this one. But if you look at a lot of people are quoting this, and that's fine. The move index, right? It's not something that I look at every single day, but it's something that I definitely look at. But if you put a line on this, right? Everybody's getting whipped around when you have volatility like this, right? And volatility like that, and things that don't normally have this much of volatility, right? It could cause losses to somebody if they're overexposed. So that's why you just don't know, right? You play it safe until the volatility comes back to normal levels and the dust settles a little bit, right? What else did I have in here? So yeah, I mean, I think what we're seeing is a lot of deflation type things, right? And if you look at the price action and see what's going on with the Qs, and even ARC was up today, right? That's not that is a deflation. That's a deflation trade. So again, one day is not a trend, but that's what I see for the day. And I think just overall, without going into much more detail in this video, I think that you just have to kind of remain defensive and patient. How many times have I said that in this video? For now, the S&P, it did not get above the 5-day moving average, right? So very simply, just to see, right? And again, the price action is telling you some things in here. Look at the volume, by the way, the last 4 days, right? It's been heavy volume, right? We did not get above this 5-period moving average. So the short-term trend remains down, right? The price action is also below the 200-day moving average, right? That is not a position of strength, right? We look at the 1-hour chart. We were inside value, just briefly. We're back out, right? How does it look in the Qs? Does it look different to you? It does look different, right? This is trying to, some people are starting to draw like trend lines in here. You could draw a trend line in here if that helps, but it is back inside the value area for March, right? So this is showing something, right? You also have the 50-day moving average crossing over the 200, right? So there's some things that look a bit healthier, right? Whether you like it or not, the Qs are showing some strength, right? And that's where they are. Right. And again, back in the middle of last week. So it's showing some relative strength. And that's what we have right now in this market. And again, that to me looks a little bit more deflationary. All right, guys, I'll leave it there for the video. Try to keep it a little bit shorter. And don't forget to make sure that you're subscribed to the video. Again, like, retweet, whatever. I appreciate that. Guys, have a great night. See you tomorrow.